where the physical weight is adjusted for the quality. Their point is that if they take the net weight, which is audit team post facto has certified, then there is an LTV breach. We have taken corrective action to make sure that the differences are minimal in terms of the assessment of gold that branches have done and that the audit team does. But I just want to make, again, one point is very clear that the time of disbursement at the branch level, based on the branch assessment which is given to customer certificate, there has not been a single case of LTV breach. So the deviation in assaying and certifying purity, net weight, sanction and auction, and breaches in LTV, they are all connected points, and they are basically, as I said, based on the net weight done by our audit team when the package go for auction, which is adjusted for quality. Based on that, if you calculate, then probably you'll find that the LTV is breached. Because what branches said 22 carat, post facto audit says 20 carat, obviously the value will be lesser. But in any case, we are putting in stronger systems in place to make sure that these deviations are minimal. Also, I just want to bring to everybody's notice that all our packets, most of our co-lending partners open each and every packet and they make their own assessment of our quality and the weight. The second point is related to cash, which is in excess of statutory limit. Cash far in excess of statutory limit. So we have been disbursing and collecting cash up to 2 lakh rupees. Whereas RBI's point is that your disbursement cannot be more than 20,000 rupees based on certain sections of Income Tax Act. Now the Income Tax Act interpretation is a little not clear and different people have different views on that. And almost every NBFC in the industry is giving cash up to 2 lakh rupees. And also, but nonetheless, we are just putting in, we are making sure that we comply with this also, and we stop the disbursement of 20,000 rupees as soon as we are allowed to do the first disbursement. The third point is about standard auction processes, where last year from October we followed e-auction by Auction Tiger. Now that is an independent platform which is also used by large banks like SBI and Bank of Baroda. We thought that a taluka level auction, because when we got almost 3,000 branches across the country, smaller talukas, practically may not be feasible to fetch the best price for the customer. And e-auction, which is in a way a transparent mechanism to discover price and get the best price for the customer as well. Nonetheless, RBI circular has been very clear that the auction should be taluka level, and will make sure that we comply with that also. The third point is about lack of transparency in charges. The only charges that, we have charges mentioned in our customer receipt as well as in the website. But this confusion has arisen from one charge. So when we actually send notices to customer about auction, we charge 200 rupees. And many a times customers will pay and the auction will be averted. So then they are not charged anything extra. But if the actual auction happens, then there's a charge of 1,500 rupees. But this extra 1,300 rupees is charged only when the actual auction happens. So RBI's point was that even if auction has not happened, you are charged 200 rupees. But there is auction notice or auction intimation charge, which is also RBI requires us to send these notices physically. So these are the legal and the courier costs that we try to defray by these charges. But we have made it very transparent and separated the auction intimation charges and the actual auction charges. So these are the major concerns which RBI has pointed out, and I try to explain that what they mean and what we are trying to do there. Now, from the investor's point of view, I think I would like to address a couple of issues about liquidity and cost. So we have adequate liquidity in terms of, we always had at the group level, and we have always disclosed these numbers at quarter end. Further now, till this issue is resolved and RBI allows us the fresh disbursement, we'll continue to collect money from the repayment. And from that perspective, I think we are adequately covered for liquidity in the foreseeable future, and we don't see any challenge there. In fact, we have 4 businesses, and RBI has audited all of them. The only business that is impacted by this action is gold loan, but 2/3 of our other businesses continue. And also we shall try and double our efforts to cross-sell and sell other products from the same branches. These branches have a fixed cost structure of monthly about 65 to 70 crores, and our NIM on the existing portfolio is about 125 crores on the gold loan portfolio. So I'm talking about gold loan cost and the gold loan NIM broadly. Typically, these portfolios, they run down in a natural course over 7-8 months, which is, and so I'm just trying to give a perspective of the liquidity and the cash flow and the cost that, will be impacted by this action. So we understand the concern that such news can generate amongst our stakeholders. However, I want to make it unequivocally clear that there are no governance or ethical issues at play. These are more operational and procedural issues, and which will address with all our efforts and sincerity. Our foundation remains solid, which is built on trust and support that all you stakeholders have generously extended over the years. And I also...
Okay, that's Nirmal Jain trying to assess and analyze the entire situation as to what really happened with IIFL. And remember, like we told you just last evening, news that was out that RBI has barred IIFL Finance from sanctioning or disbursing gold loans. So that's the clarity coming in from Nirmal Jain right now.